All right, so hello, I welcome you to Stock Market Mutterings trade review and recap for the 23rd. You might be able to tell by the exuberance that is within this voice of mine. I wouldn't really call it exuberance, but it is better than it was yesterday because today was green. Not huge, but green is good. And it really came down to one trade, which was Wayfair. But more importantly, above all this, there was something very special that happened in the market today. And we're going to go over that here in just a second if you stick around. So we'll start out with, let me do this though first. If you guys need help with your trading, make sure you visit thelinkenlist.com. That's my shameless plug. Click on the trade room tab and you can start trading with us right away. So let's talk about this here. Here's what my thoughts were, if you didn't already know, is every day can change just a little bit, but as I've been saying, short into big rips, buying into big flushes. We kind of gapped down. I mean, we gapped down really good today on the market. And let me just pull up the SPY. And I was thinking, you know what? If we can just start the day out with a panic flush, we're getting down to some really good areas here. If we can just kind of shake everyone out, just panic down in the morning, I'd really like to get long. Now, one of the things is when you're a trader, you always have to have like plan A, B, and C, because it's just like life. Plan A never works out. Very rarely do you get the exact look that you are looking for. So we were kind of looking for that, give us that big old flush there in the morning, and that didn't happen, And the top trade that I was looking at today was just Apple. I kind of moved away from Netflix, NVDA, and the rest of those just because their range is so maddening right now. And this thing had already gapped down. I think it was $3 or $4. Let me just subtract this chart, get rid of this over here. This thing had already gapped down, was selling off at pre-market. I'm like, man, if this thing gets down into this support, you can see it right here, 212.60s. And it was at about 215. I'm like, if we could just get down there close, 214s, 213s, I'm in this trade. It doesn't do that. Actually, the market starts to turn around and spike right at the open. So when you get that spike, like I've been saying, I like to short these, but they weren't big enough spikes, in my opinion, at the time to render a short. We had the market kind of spiking. You had a bunch of other spikes going on, but they weren't big enough to say, all right, I'm just going to go in on the first green candle, because again, you have to respect the fact that there could be one of those 500-point up days. So at this point, you're just kind of like, well, I didn't get my flush, but are we going to go up? So we kind of have to stall around, or at least I did. Maybe you found something right off the top there early. Good for you. But I didn't. And I was just looking here like, all right, if this thing's going to flag, I'll take a shot at it, because a lot of this other stuff is starting to perk up. We're seeing, some buying across the board, not huge, but I'll go ahead, try it here. I'll keep a really tight leash on it. And we bought it. We got one little small spike and it starts to roll over. Like I'm getting out. I'm on, like, I got a touchy finger right now. It's like, get me out of this thing the moment I start seeing a red bar. So, it's a scratch trade, and then it ends up doing kind of what I wanted it to do first thing in the morning. It re-rotates down to the low, which we get long again, and this was a little bit better trade right here. Now, I have to admit, because of my itchy finger there and the wackiness of this market, when you're looking at a chart, here's one thing about charts. When you're looking at them, they're perfect in hindsight. You can see all this stuff, and go, oh yeah, that's a perfect chart read. But when it's happening in real time, don't you notice that, man, this is different, right? This is really, it's so easy to get shaken out, especially in a super volatile market that's going back and forth, because, you may see these candles like this. It looks like this is consolidation, but in real time, these things are bouncing back and forth 80, 90 cents, and you don't know if the next tick is going to draw you down to $2, $3, $5 or whatever it was. So anyway, no excuses. I took a little gain there, but I just didn't have the patience to stick it out this whole 45 minutes because I just wasn't getting the signals. Now at this point, this thing starts launching and everything's going around. And, I have nothing going on for the day. And then I move over to this Wayfair. This was something here that just looking for something that had not quite yet bounced. I got in it a little bit early and it rolled over, made a new low, which I wasn't happy about. But once things started to turn around there late, you started to see the market come up out of range, making some lower highs, excuse me, higher lows throughout the hour. Then we got long and we actually captured this really nice move. And that was the move of the day. At least for us, it was. For me, I don't know if anybody in the room was taking it or who was in it. But this was the big trade for me today, and it got my day green. It was the biggest trade by far. We took about $3 or $4 on this move. And as I said, I really got shaken out of about 2 or 3 trades there with Apple. And I even had one with Netflix. Excuse me, I took one there earlier with Netflix. Same thing. It didn't quite, I didn't quite get that feeling that that I wanted early on. So the way it looked for me is I wanted that flush to start the day to really get long these names. And that just didn't happen. It actually came by about 30 minutes later. It tried to flag here. I took some small shots. And the reason I want to bring it up this way is because when you're trading, there's never a bad trade if you use a stop. Like if you have a plan, it's not a bad trade, right? The only things that turn into bad trades is when you go against your word, you disrespect your stops, you let things go, and you make excuses for it. That's when things get really bad for you. So in this case, I wasn't very happy. I didn't consider these tier 1 setups early in the morning on both Apple and Netflix, but I was willing to give it a try because I said, hey, if it does flag here and they do break highs and the market does turn around, we could see a really nice move. Now, see, this is what we always talk about. It's okay to be wrong, just not financially wrong. And sometimes you're right. Your just timing is off. That's what trading is all about, right? So, yes, we were right. We knew the bounce was coming, but it came much later in the day rather than first thing in the morning. So at this point, I was thinking, let's just go ahead and take a small shot at this. And then, they didn't work out. But later on, we were able to come back to them and then re-enter rather than having to fight them off with bad prices. Or maybe these made a new low and went down 10 or 15 dollars later. Now later on I did actually go into this on the bounce late day. I was trying to squeeze out a little Netflix. I got kind of hit on that one a little bit. I had a small size, but still I got hit a little bit there. But I managed to finish the day green. All in all, I'm going to say it was okay considering I would have liked to have done better, obviously, but it is what it is. Now, let me show you what we have uncovered today. And that is, I want you to take a really good look here at the SPY. Let me see if I can come back here and minimize this chart just a little bit for you. Yeah, there we go. Okay. Now you take a look at where we are today. As this thing was going down, one of the important spots that we were looking for is, if I want you to kind of go back. Remember, we always talk about support, resistance are the biggest indicators when it comes to trading. That's the best analysis you can use. It's where are people interested in buying, where are people interested in selling. And when things are going down in a panic like this selling, people have a tendency to make rash decisions and just get out of stuff without taking a look around and saying, well, where is that next level of buyers? So what I really want you to look at is, if you go back here into the month of late June, early July, you're going to see a cluster of days here where the market built this base roughly around, let's just say 269. We don't have to be to the penny, but we just have a reference point. Remember, that's all charting is for. It's just a reference point. You've got about 3 to 4 days of consolidation here in this area, okay? And not only do you have it there, but if you go back, you look right over here on the 29th, I believe it is, around Memorial Day, you have the low at the same spot, just right down here at the, and again, they're not going to be to the penny, but they're very, very close. So what you were looking at this point is a double bottom that had developed in the market from late May to the first part of July, just right here within this area. And this market just basically trades right down into it. I know it's real hard to see with this. You can look at it back on your charts. But it trades right into that. Yes, it sunk just a little bit lower. But as soon as it got down there, that's where the area found itself some solid support. And you saw a really nice wick coming off of the bottom. Okay? So, again, when you're looking at things and you're wanting to figure, things just don't bounce at numbers for no reason at all in most cases. They don't trade, stocks don't trade back to certain areas and stop for no reason at all. There's normally an answer to it. So what I want you guys to focus on if you're learning charts or you're struggling with your trading, it's real easy to make rash decisions. A lot of people think emotions in trading is just about you getting upset and mad. That's not the only part of emotions. Emotions is also acting out in certain scenarios like panic, like fear, like greed, those kinds of emotions. So it's easy to panic and be shaken out of a trade when you look back and go, oh man, I didn't even notice, but this thing was reaching back to 4 or 5 months support. This is a big deal. This is a major area. And when the market has sold off so heavy to start, it's almost natural that it will bounce there. If nothing else, it'll at least try to make a bounce. And based on the way that it makes that bounce or the attempt, that'll give you the idea of, hey, this is where I'm at. So I want you to also take a look back. When you go back to February, this is a very similar situation here to February. You were at all-time highs, market's just motoring along, no volatility, and all of a sudden it gets spanked and buries itself down into the 200 moving average. Now it makes its initial flush right here. Okay, take a look at this. Makes it this initial flush. Then it makes the panic bounce, the old customary panic bounce after a few days of selling. Then it re-rotates, makes a new low, hits that 200. But here, take a look at this wick, and I'm going to highlight it here. Just look at how that wick comes up off of the bottom there, and the market almost fights itself green. That's showing you just how strong that buying came in. Now, once it established that low with that wick, the market fights its way back. It spends the next few days making a smaller short-term rally. Yes, it took a long time for it to work itself out, but for that short-term period, a week or two, you saw a bounce off of that. You have somewhat of a similar situation here. You got down into support. You're actually under the 200 moving average, so that's a factor there. But you got down into support. You made a nice wick off of the bottom, market almost clawing itself back to green before it closed. And maybe this signifies a little run back to 280. Now, I'm not going to say, because this point to get back to all-time highs, it took from February all the way to September. So it took 8 months. I'm not going to say we're just going to snap right on back to 290. That's probably not going to happen. But you might see a shorter term rally ramping back up to 280. Now, there definitely are some differences. One, it's not as aggressive of a buyback that it was back here. I mean, this was a hell of a pickup. I mean, this thing rallied from 253 to about 260. So it made a monstrous move. This one didn't quite do that, but you did see I think it was 350 point retracement back into the market. So this is something to keep an eye on. Now, in order for this to confirm, it will have to come back above 275 tomorrow. So I don't care what you're looking at. If you're trying to reverse this market or you're trying to think, hey, are we done? Is the selling done? Are we going to rally? 275 right now is that line tomorrow. If you can move above that, stay above that or around that without really washing out, build around that, then yes, we may see a run back to, in the short term, 280. Now, you definitely got to start looking at if this doesn't hold back to earlier parts of May, the 260s. I know that sounds like it's a hell of a long distance away, but that's what it is. So the thing that you really needed to look at, the surprise, I say, in air quotes back here that you can't see me right now, is that this got into very important support and the market held that. And it made a really, really nice retracement off of that. And the way this chart looks is just a little tamer of a version of what you saw in February. Now, that doesn't guarantee that we're going to bounce here, but look for that. Look for that 275. Look for the behavior around 275, and that could give you what you need to see going a little bit further. So I'm going to wrap it up there, guys. It's been a long day. I've been doing these here a little bit later, but tomorrow I'll go back with my grizzled mug there on the screen, and I'll post up some more of my brokerage statements. Again, if you need help, make sure you visit us at thelincolnlist.com. We'll see if a couple of these other charts, a couple I've got in my mind here is AMRN. This thing looks pretty good. AMRN, been talking about this. Nice little breakout in today's market. Apple here, I know I traded it today, but still, if we can get above this consolidate, I'm running through these real quick just for the sake of time. 223.30 break here. Looks like it could, kind of work its way back up maybe to its high. So a lot of nice looking charts still. We'll just have to see if that SPY can work its way through 275. All right, I'll leave it at that. As always, thanks for watching this video. Take care. I'll chat with everyone tomorrow.